Hi all, it's Catherine Burgess with Burgess Group Compass. We're talking about the local and national real estate headlines. Then we'll dig in on unpacking them a little bit. And so getting started, locally we had price reductions in the last 2 weeks at a rate that we haven't seen in years. So the important thing with that is that the seller grip on the housing market appears to be loosening. Then nationally, we saw price reductions up, interest rates up, and the second home market down. So unpacking those headlines a little bit, locally, our new listings were down last week. Year-to-date under contracts were also down. We are currently, last week we were at 900 year-to-date under contracts, which is about 200 to 250 lower than normal. So that is a real reduction in the overall volume of what's happening in our marketplace right now. Simultaneously, we have so little inventory and so much demand that CoreLogic just reported that there has been a 2.2% price appreciation nationally for the month of February. So we are seeing things heading up even though our overall numbers are lower. From a price band perspective, the last 2 weeks we saw a pretty quiet market that may be due to the spring break vacationing, but we had one price band that was consistently active, and that was 2 million to 2.5 million. So both in the previous week and last week, there was a lot of activity in that section of the market. And the real news is what we talked about, that if you look at this chart, the price changes, seller price changes, which 99% of the time mean price reductions, they are up in all categories. So sellers who set aspirational prices and did not meet them have finally said, it's time to change prices. Buyers are not meeting our prices. So compare that with what we saw in the previous weeks, and you'll see this is a leading indicator of seller mentality, and this is what we're talking about with sellers getting to the point of realizing that they are not commanding the market in the same way that they had been previously. So then nationally, interest rates have surged, and we have seen them, the 30-year fixed, above 5% in the past week, for example. So that has resulted in a slowdown of online searches, showing appointments, and mortgage applications. Those are all three leading indicators of buyer demand. So buyers are, taking a step back and slowing down a little bit. The price change rate is up. It's 3% higher than it was at this time year over year, which again shows that what's happening nationally is echoing what we're seeing in our local market. So again, sellers are coming to terms with the fact that they're not necessarily commanding the prices that they thought they could command. Then the second home market, which was booming previously, it's still up 13% over where we were pre-pandemic. However, we've had some sharp declines for 2 months in a row now. So there is speculation that has topped and that we are going to continue to see a decline there. The way that we see that is through mortgage applications, which is again a leading indicator. So buyer activity is decreasing in the second home market, though it is expected to stay above the pre-pandemic levels just simply because so many people are working now remotely. So the Fed has been wanting to cool things down, and through these reports, all of these different things show what kind of impact their interest rate increases have had in our market. They're expected to increase rates in May, June, and July. It's expected to be 0.5% in each of those months, if not 3/4. So we are going to see a big transition in how our market behaves in the next few months. Do keep in mind that historically our interest rates have been enormously low since the last recession. So it's highly likely that we will see things go up significantly The real estate market has soldiered on through 5% rates, 8%, 13%, 16% in the 70s. We will see it continue to move in all likelihood, but there will certainly be changes in the amount of buyer activity, and that is exactly what the Fed is trying to do. So sellers, keep in mind that for right now, there's still lots more buyers than there are sellers, and we continue to have this enormous dearth of inventory. So you still have an opportunity to move forward. It could be that we won't see 7 or 8 offers, that we'll see 2 or 3 offers, maybe even 1 offer. But there will continue to be demand. We have not come close to meeting the shortage of inventory yet. Buyers, you should see fewer buyers in the marketplace as people get priced out essentially by both interest rates and the rising home prices. So it may get easier to actually get under contract as we proceed. So we're answering a lot of questions these days. Please feel free to reach out with questions. We are so happy to be a resource, and we will see you again in 2 weeks. Please like, subscribe, and share. Thanks.